Yesterday's US inflation report was as good as any optimistic stock investor could have hoped for. It seems that the Fed Reserve believes that it was not just 1 month with a weaker than expected inflation, but that a mild deflation trend has already been exposed. For example, consumer prices rose by only 2.1% year-on-year over 3 months. Thus, recent statistics confirmed that the US economy is still losing momentum and inflation is ebbing away. This information provides a comfortable situation for the Fed Reserve to cut interest rates. The US Department of Labor reported on Thursday that consumer prices inched down to 3% in June for the first time in 4 years. This finally brought disinflation back on track and increased the likelihood of a rate cut in September to 93%. Moreover, the market now seems to be convinced of 2 rate cuts this year in September and December. These forecasts and expectations are quite realistic. Thus, the US dollar is entering the bearish stage. Of course, the bearish market will be interrupted with the upward retracements along the way. Something similar happened yesterday in the late New York session. After a soft report on consumer prices in the United States, the dollar immediately began to lose ground. Eventually, it incurred heavy intraday losses. And today, the greenback is taking a defensive position. At the same time, its index is consolidating within the intraday corridor of 104.30 to 104.50. The odds are now almost 100% that the Fed Reserve will cut interest rates in September. The US dollar risks of falling even lower in the near future. The dollar is likely to continue its pullback today, although it will try to stabilize slightly below the current levels. After this, the instrument may resume its decline. We should not forget about the political component. There is a strong likelihood that Donald Trump will win the upcoming presidential elections. His populist reforms may work to revive inflation. Therefore, the US Central Bank will have to act more carefully. However, today the US dollar is likely to continue its pullback, although the market will try to stabilize the price slightly below the current values. The US dollar is expected to close the day in the red for the second week in a row. Today, the euro-dollar pair is trading steadily slightly below 1 month's high of 1.0900 reached on Thursday. If the US dollar continues to weaken on the daily time frame on Friday, the euro will try to gain a foothold above this round critical level. At the same time, speculative growth is always an extremely unstable phenomenon, so we are watching a minor pullback within the intraday corridor of 1.0865 to 1.0892, which can be a process of regrouping trading forces. Moreover, if the euro cannot settle above 1.0900, the current pullback will continue indefinitely. The price of gold has also retreated today after yesterday's wild rally. The non-interest bearing asset is trading in the intraday corridor between $2,405 to $4,000 and $2,422, climbing to new all-time highs. But as short-term traders took profits, gold also pulled back just below the round level of $2,400 per troy ounce. The overall uptrend is going on for the long term, hence higher levels are still ahead. It's clear that oil prices also received fresh impetus to grow amid the weakened US dollar, but the Brent grade is still trading in its previous range of $85 to $86 per barrel. By and large, the oil market is still in relative balance, so unless some unexpected news appears, then only data on the US oil inventories can set the market in motion, but the report will be published only in the middle of next week. In the meantime, oil prices still do not give up and attempts to restore previously lost positions during the correction. At the moment, the most realistic support line is at the price of $84 per barrel. If the bears fail to assert their strengths below this area, oil prices may begin to gradually increase, attracting new buyers. You have watched a roundup of the global financial markets for today, July 12. Keep close tabs on the global markets on the InstaForex TV channel. Feel free to leave your comments. Our experts are always ready to answer all your questions. Thank you for watching and see you online next week.